The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, USDA November WASDE Report Day on Thursday led to a pretty risk-off trade in the grain and oilseed complex, and cattle had a pretty rough day as well on Thursday. Let's talk about all of it and get some thoughts and market analysis here on Market Talk today. Joining us now, Bryan Irey from Crossroads Coop is with us here on the program. Bryan, good to have a conversation with you, even if it's on a tough day. If you're a market watcher, what a down day we saw on Thursday, Bryan.
It was a little negative, no matter what facet you're looking at the markets from today. It's just brutal and in the grains after I think we got a little bit of false hope yesterday with the spike that we saw late in the session, but nothing good out there today to talk about.
No. Let's take a look at the WASDE report first and just the headlines there. And USDA corn yield going up above trade expectations. I think everyone thought the corn yield would go up. Soybean yield even went up slightly as well. And then ending stocks, corn, beans, wheat on the U.S. side, all moving higher. I just didn't see anything to tell me that, that report overall, I think, was just bearish across the board. Bryan, what do you think?
Yeah, I would totally agree, Jesse. And I from what you said early on I am not surprised that corn yields are higher. I'm just surprised that the USDA raised them this much this early. I think that's the real shocker. I kind of expected maybe we see that number in the January WASDE numbers, but not before. And I think what's even more disturbing when you look at the rise in yield was what they did on the demand side of the equation, because you just didn't expect that they were going to touch that. But to offset that 170 million bushel increase in production, they raised exports 50 million, they raised feed usage 50 million, and they also raised feed and residual 25 million, and ethanol for fuel 25 million on the demand side, for a total increase of 125 million bushels there. And I think that you have to look at those numbers very, very hard and wonder where the extra 50 million in feed use is going to come from and the extra 50 million in exports is going to come from. I think the trade did maybe feel like corn for ethanol could have been 100 higher, but maybe the USDA eased into those numbers rather than just took it in one fell swoop.
Yeah. No, that's great thoughts there, and interesting moves by USDA for the corn side of the ledger. I feel like, though, the corn market absorbed the numbers a lot better than the soybean market. Soybeans, just between the collapse late in the session Wednesday and then the down day on Thursday, what was kind of a rosy outlook, I think, in this bean market, and I think it still could be, but last couple of days have not done the soybean market any favors here, Bryan.
They really haven't. And, I think the thing that you want to throw in on top of that is just 2 days of incredibly good export sales, too, on the soybean side. Yeah. But it turned out that was a, buy the rumors, sell the facts sort of an event. And we have taken a beating here. But I think one of the things with the soybean market is we've rallied considerably here from early October, late September into October and on into November here. I think there was a lot of blue sky in that market because of the dry weather that we had in South America that was causing some concerns over late plantings down there and possible lighter than normal yields added value here, but we still have a tight balance sheet. I mean, the USDA projected 245 million bushels of carryout, which is up 25 million. Probably enough soybeans to get through until new crop. But I do feel like the bean market was just a little bit overdone, and not surprised to see some money leave there today.
I know you do obviously a lot of work on the co-op side and thinking about, the end user side. You have that perspective as well. What should folks think about here risk management wise in the grains as we've gotten past this report now and get to the end of the week? Is anything changed in your mind, whether it's corn, beans, or wheat, Bryan?
I think specifically on the corn side, it's an interesting situation. The farmer is the big long in the market. Most farmers were undersold on new crop corn. As you know, we've watched corn fall, what, Jesse, $4 a bushel cash wise from a year ago. It's made it a very, very difficult marketing year for the producer. I think the end user has sat back and has done a really nice job of trying to layer in purchases to feed cheaper corn to livestock, and that has worked pretty well for them. I think over the next 60 to 90 days, probably maybe even 60 to 75 days, you see corn basis appreciate. And it could appreciate fairly substantially because I think once corn gets put under a roof, the producer is not going to do a whole lot to become an active seller unless we get a flat price rally of some type. So basis should appreciate. I think that the end user probably needs to sit on his hands here for a minute and kind of go hand to mouth, because once that calendar flips and the producer does turn seller, I don't know if the market can digest all the corn that could potentially hit it over the first quarter. I think that is going to be a real concern. And in light of today's price action with futures, you could see both the board and basis erode rapidly as we progress into early 24.
Good thoughts. Good thoughts. Talk to me about the cattle market. You talk to a lot of cattle guys out there in your neck of the woods out in the Mountain West, and just an awful day. Live and feeder cattle futures taking it on the chin. What's going on? Is this just a case of, is this fund money moving out of the market? Is it something else? What's going on here, Bryan?
I feel like that is, it's fund money leaving, managed money leaving, cattle or livestock futures based on fundamental reasons. I think there's good reason for them to be leaving today. And meat movement has been poor. It sounds like meat movement has been very, very poor in the grocery store. On the higher end cuts especially, that is where the biggest trouble has come with beef. And as a result, they've slowed down chain speeds, and there's a lot of cattle standing in yards that need to be slaughtered that are just getting overfed right now. I think that has been one of the problems. We got blindsided a little bit here with the last cattle on feed with more placements than they thought, and those cattle primarily were, I think the big surprise really came from more cattle coming out of Canada and Mexico than the trade anticipated. Obviously blindsided folks. There's not been a lot of heifer retention either, which has put more cattle in the feed yard. And you and I may have talked about this one time 2 or 3 months ago, but the rancher was faced with a really tough decision on whether he should put a $1,750 to $2,000 heifer back into his herd and not get a calf out of her for 2 years, or whether he sold her for a feeder. And in most cases, it appears the market's telling us that they sold them as feeders, which was probably a wise decision. And I think that, one of the things that one of the guys that I talk with a lot is on the cattle side that is concerned about is that we really haven't alleviated the supply problem. We've moved a lot of cattle into the yards because of the lack of heifer retention, the cattle coming out of Mexico and Canada. But it also got a little dry here in August and September, especially out in the West, and the cattle got pushed into the yards earlier than the trade anticipated. So on the back side of this thing, you could see a big gap in cattle numbers again, which is very, very concerning, mostly not just for the feed yard who is going to stretch to buy cattle, but it's also going to have an impact on grain demand down the road at some point, if that proves to be a fact.
Very good thoughts. Very good thoughts. Bryan, before we wrap it up today, anything else final you would share? Obviously, as we alluded to, busy day, hard to find positives. Anything else you would share, reiterate, or take away from Thursday's trade action?
I think the trade action today kind of spoke for itself. And you're right. This is just about as negative of a day as you could possibly have in the marketplace in both the grain and meats. As a producer, I really feel like being on your toes, starting to market 24 production, especially on the corn side, as we have December corn futures out in 24, still above $5, only at about 509.5 today. But we have had pretty good success here over the last month as we've seen spikes in those futures, as high as up to five and a quarter, getting producers to market grain. And I think that if nothing else, getting futures contracts on as a hedge against that 24 production makes a lot of sense. The same in Kansas City wheat. I mean, we're far from it today, but July of 24, Kansas City wheat up around $7 was a good sale. And I think anything back up in that area again, $6.85 to $7 is a good sale, as it just looks like prices are going to be much cheaper moving forward, and finding good returns on investment in these markets is going to become more of a challenge with higher inputs as we move forward.
Well, we appreciate the thoughts on a busy day in the market trade. And with that, we'll let you go. Bryan Irey with Crossroads Co-op. Thanks for joining us on Market Talk today, Bryan. Have a great weekend, and we'll talk to you again soon.
Sounds good, Jesse. Thanks for having me again.